Motilal Oswal Financial Services. I spoke with the group CFO, Shalibhadra Shah, and he spoke about the company's growth outlook going forward. Listen into a slice of that.
I think on the capital market segment, what we are seeing is industry first is adding almost 4.5 million demat accounts. So that has been the hook actually for the entire growth. And that demat account rate is improving on a YOY basis by almost 50%, which is resulting into a lot of clients entering the equity capital markets. And more particularly for us, I would say that that entire segment where we are adding a lot of clients is now, of course, getting positioned as a wealth management segment for us. The focus is actually to not only gain market share on the volume side, but also build a large revenue market share model. There we have actually been very successful. If you see the growth rate for us, we've grown actually on a YOY basis by 70%. Of course, sequentially the quarter was largely flattish because April and May were slightly slower months. But I think the entire momentum has caught up from the June month, where we are seeing a lot of base expansion and even a lot of growth in our distribution assets, because that is actually grown well, which is the next trigger for us. And those assets have actually grown 59%, which is our annual recurring revenue assets on a year-on-year basis. The focus continues to remain for us as an advisory-driven house. That is our strength. Our strength has been equity advising, and that model has been very well time-tested for us, which is building the growth.
Okay. Just talk us through, how one should look at the wealth management lever. Therefore, my understanding is you're tapping into clients from capital markets to venture more into wealth management. And as you make that journey, the numbers for wealth management are starting to add up and reflect. Talk to us about what are the constraints in this industry? That's point number one. Is it lack of good relationship managers? What is it that you are facing in terms of constraint, and what's helping you stand out and grow so rapidly?
Yeah. So clearly, I think this segment is a segment of mass affluent customers and typically more HNI clients also for us, because we typically see where 10 million plus is typically the demat average ticket size for our clients. 70% of our AUM is that. Today, I think, so there are two kinds of players typically in the market. One is the discount brokerage houses, basically, who are into the platform model where typically execution is the key through the app. And the second is basically players like us who are very well focused on building advisors and building the relationship with the client, because client needs are also changing from only from a transaction-driven approach to more investing. And that is where we are positioning ourselves as a trusted advisor for our clients. So we've built this advisory model with almost 2,000 advisors in this segment, which is catering to a base of almost 9 lakh active customers. And today, I think the challenges are really for the industries from a regulatory perspective. What is coming in, because a lot of regulations are under revisit by SEBI, and basically what is happening is that a lot of this is changing the play model for the discount houses also, because the players like us would better the competition intensity, because the regulations are more towards a lot of these discount houses actually announced increase in the pricing also, whereas we are already on the full service pricing model.